Hello, my name is Gail Kavanaugh. I'm with Gail Kavanaugh's Financial Solutions. I'm a licensed life insurance agent in the state of Rhode Island. And welcome to Life Insurance. Do you have a crystal ball? Today's families are in dire need of life insurance. However, few heads of household make it a priority to take the necessary steps to protect the family from financial calamity. The reason is that many people go through life thinking that as long as they have a good job with a good salary from a stable employer, they will do well in life and have the things that they need. But nothing could be further from the truth. There was a time when married couples had children and the fathers worked, while the mothers stayed at home with the children. This was called a nuclear family. Fathers worked at the same job for most of their married lives and retired after 25 or 30 years or more with a pension plan to help support him and his wife during their retirement. Their children married or went to school, if they were fortunate, and then found jobs after they graduated from college. They in turn had their own children, and the cycle was repeated. Today, however, the typical American family is not so typical anymore. Whereas the families were composed of a father, mother, and children, 40% of all families today with children under 18 years of age are headed by single mothers. These single mothers have an average income of $23,000. Of the 75 million children in the United States, 40 million of them live with only their mothers. 1/3 of those mothers have no life insurance. Because of the increasing opportunities for women beginning in the 1960s, women now have careers in addition to raising the families. The married women earn on an average of $80,000, which in some cases is more than what their husbands earn. Because of the changes in the nuclear families, women need life insurance on themselves to protect their children and spouses from financial calamity. Women often underestimate their value to the families, needing to purchase more life insurance. Approximately 93 million Americans today do not have life insurance. However, people don't stay at the same company very long today. In fact, the average worker job hops every 4.4 years. They take advantage of the company's group benefits, if any, and then when they leave the company, they cannot or do not take it with them. The benefits, which include life insurance, often are not portable or are too expensive to continue making the payments on their own. As a result, the worker may be without benefits until the next enrollment period at the new employer. 1 in 2 Americans say they need life insurance for their families, but fail to purchase it. Few plan for retirement, and as a result fail to accumulate enough to retire on. As a result, they have to work during retirement, and many die without life insurance or an income for the family to continue their normal life. So what happens when families fail to purchase life insurance? When families do not take the initiative to purchase life insurance, they are leaving their families at risk for financial calamity in the event that the father or mother expires prematurely. The children may not be able to attend the college of their choice, the family may not be able to secure the funds for final expense, nor will they be able to continue their normal lifestyle. So why do we need life insurance in the first place? Well, we owe it to our families to provide the best way we can for them. Most of us want to be responsible and provide for our families' needs. Besides providing an obvious final expense benefit, life insurance can pay off a mortgage, enabling our families to continue their normal lifestyle if we die prematurely. It can provide for much needed college funding for the children, and it can help pay off the debts. So the solution to this problem is to protect the family by purchasing either term life insurance or whole life insurance, or a little of both, to provide for the family's needs. Term life insurance is a pure death benefit lasting for a certain number of years, such as 10, 15, 20, 25, or 30 years. At the end of the term, there is no more coverage. It is designed to cover needs which are temporary, such as mortgages, debt, college funding, or the cost of raising a family, and these will not last a lifetime. The cost of term insurance is low to enable families to purchase a significant amount of life insurance. However, whole life insurance will cover the final expenses and debts at the end of a lifetime. It will be needed throughout the life of the individual because we do not know the date and time of our death. Additionally, unlike term insurance, there is cash value which accumulates in the policy beginning in the second or third year, which can be borrowed in the event of an emergency. However, if the money is not paid back before death, it will be deducted from the death benefit. Often, people who do not have a family to support will only purchase whole life insurance. The only way to determine which type of insurance you need and how much you need is to sit down with a licensed life insurance agent who will help you determine these needs. If you'd like to sit down and determine your needs, please don't hesitate to give me a call.